Stephen Johnson here. I'm back, and this is a little bit of a different video. I mean, for starters, you will not be able to see me, which for some people will be a good thing, and for others, it will be an even better thing. I don't think it's ever a bad thing not to see my face, but this is not the point. The point is, first of all, just to thank you, and absolutely, again, overwhelmingly positive response. So many questions, so many people on Snapchat, Instagram. I'm getting emails, and honestly, some of the emails are so flattering. It's just awesome to hear that I'm helping people. It's awesome that, like, I'm even getting questions, people saying, you can be my mentor, and I'm like, you don't want me to be a mentor. Like, I'm fucking down. Go check profit.ly. I'm down $700. You do not want me to teach you how to lose more money. I will be like, I can mentor you to like lose $1 million. I can't mentor you to win $1 million, or like I can tell you like what to do and just do the opposite, and you should be making profit if $700 not losing. But in all seriousness, this is a video about an Excel, and by the way, I'm super fucking excited about September. I'm going to be trading off an account of $2,500. I'll be trading 2-3 times a week. Average trade about $1,000, and I'm just really excited. I had a profitable month in July. I aimed a lot of mistakes out. I think I'll have a profitable month in September. But less about me. This is really to talk through this spreadsheet because I'm getting so many questions about it. And people are like, please, can you send the spreadsheet? Can you send the spreadsheet? And then I'll send it, and then they're like, oh my God, what does all of this data mean? Especially like some of the questions I'm getting, people really don't know. And people are like, can I have a Skype call to discuss this? And I'm like, honestly, like I am a nice person and I want to help you, but like I just can't do loads of Skype calls for free. It's not really feasible for me. I have a job in another company that I kind of run, and I already have no social life as it is because I try and balance these things. So I want to do this quick video because I want you guys to have this information and this data. Trading in the beginning is fucking overwhelmingly difficult, and it's absolutely scary, and then you kind of get wrapped in. I mean, if it's with Tim Sykes, you get wrapped in with all of this marketing, and then once you've signed up, you get hit cold with brokerage forms, and like you hit the stock market and you like don't even know what the difference between a bid and ask and a spread is, and you're just like, what have I honestly got myself into? And so this is an Excel, and the reason that I created this Excel is because you really have to understand the stock market if you're going to trade it. And to understand the stock market, you need to monitor what's going on to have a better influence to have a better idea than the next average fucking joker degenerate gambler. So basically I categorize stocks into spikers, stocks that shoot up, spike really high in the morning. I don't have a graph of this. Maybe I do. No. Spikers, which literally they'll go from like 4 to 7 spike in the morning, and then they'll kind of drift off throughout the day. Stocks that grind, which looks a lot more like this, the slower movement. Stocks that spike go boom straight up in the morning, and then they kind of fade off during the day. But yeah, I've got kind of grinding stocks, and then I've got gap bars, and gap bars are kind of stocks that kind of gap up, and they like gap up from 7. Just Google spiking stock, Google gapping stock, Google grinding stock, and I'm sure you're going to see examples if you're not sure what I mean. But okay, and then so basically I've got these 3 categories, and I track stocks every single day. So I'll just take you through one of them. I'll take you through spikers, and I'll show you how I kind of fill this in. So basically, I've got Equity Feed. Equity Feed's the software that I use to chart software. And I'm on yesterday. This is actually 29th of August 2016 on a Monday. I'm looking at the previous day's data just for the sake of because I don't want to track anything that has not closed on the day yet. So generally, I'll always look at stocks between 0.8 because I don't like buying too cheap stocks. It's just me. Whatever works for you works for you. And I should not, but I like to go up to $25 just because I don't want to miss an opportunity. I like to play between 0.8 and 12. But I just track up to 25. I don't know why, it's just a personal thing. When you're looking at volume, you want shares that have traded at least 3,000 shares. Like this means 3,000 transactions have taken place between the buyer and the seller. And you need at least kind of a million shares in volume traded. Is that 6? 1, how many? There's 1, 2, 3, 4, 5, 6. I think it's a million. Yeah. No. Yeah. A million. Okay. And then you've got the top percent gainers. This is Equity Feed. Equity Feed, if you ever watch this, sponsor me. I'm a broke trader with no money, but I love the software, and I would love it if you could sponsor me. Yeah, PQ was the highest gapper, the gapper of the day. Okay, now I can show you what a gap up is. I'll just click this real quick. A gap up is exactly, let's go to a 5-day chart. Look at this. This is a gap up. This means it got all bought pre-market and it gapped up. And this has went in my gap up chart, the gap up XL. Eagle was a grinder. This has been grinding all day. I actually didn't make all those money on this. But yeah, it really had a nice morning move, and then it dipped. I remember buying it just before the dip, and I bought it when I came back. But anyway, this is, you could call it a spiker because it did spike, but it's just gradual enough that I would call it a grinder. A spike would be if this first bit between 9 and 9:30 didn't happen. But anyway, so for example, with EGLE, I'm just going to log it again just so you guys see. Well, actually, I won't because you won't see the fields. I'll just tell you. So date, if I was to do this, the date is the date. So the date that I log this would be, if we look on previous day data, oops, today's data, whatever. So say, for example, we log this on the, is this live? Yeah, let's go on previous day data. Say the previous close was 7:07. So I'll write previous close, EGLE is the ticker, previous close is 7:07. What did it open at the next day? And then I've got the open. So straight away I know what did it previously close at, what did it open at. And then I've got a quick calculation we can do, all do percentage increases. What was the increase between the close and the open? How much was the gap? And this is just so I can see, like, maybe if it opens a lot from its close, it spikes. Do you know what I mean? So I can find out these kind of similarities. And what was its high of day? What did it spike to is generally the high of day. The high of day, you can basically just find, yeah. I mean, this is Equity Feed, but every charting system has the highest point that the stock went to on that day. And then this is another calculation, basically, from where it opened at, from where the stock started at, the initial price, to the highest point it reached at the day. Because what you've got to realize is that I always track the stock at the end of the day, so I see its performance. So, like, for example, today is Monday, the stock market just opened. I'll track all of the data from today, tomorrow morning. So yeah, how much did it go from that? So initially, it's like from where it closed to where it opened. How much is it up pre-market? And then from where it opened to the higher day, how much did it spike basically from where it opened to where it reached? How much percentage wise? So, and then it's trying to find correlations. If it opened 10%, it spiked 10%. The next time a stock opens 10%, will that spike 10%? It's just trying to find these kind of similarities. It's really kind of basic stuff. And then where did it close? How far off its highs did it close? This is HOD to close. So close is just the last price it traded at. And then how far from where it spiked did it close from? So this stock, YRCW, it closed 0.7% off its highs. Its higher day was 11.95. It closed at 11.87, so it's just off. So I'm kind of thinking, if a stock closes next to its highs, is it capable of spiking again maybe? Is it going to wash out the next day? These are the kind of things that I look at, and this is just the closing price, its last trade. This last 30 minutes is like, did it close strong in the last 30 minutes? Did it not close strong? Did it close weak? And basically this just means, was there a few green candles, which makes it strong? Was it medium? Is it kind of a green, red, choppy? And did it close weak? Is like, did it kind of wash out just a little bit before it closed? And then you'll see the next day. I'll take a look at it the next day, at the end of the next day. So I'll have a look at it on the, say 29th was a Monday. I'll track it on the Tuesday and look back. And then on the Wednesday, I'll check back again. So this stock, it opened 10%, it spiked 10%. So it spiked from, its open was 11 and it spiked to 11.95. So it spiked $1 a share. It was up $1 and it spiked $1. And it closed near its highs. So what happens when its stock gaps $1, spikes $1, and closes right near its highs? Well, guess what? In this occasion, it opens up about the same. So there's no point buying, like, I'm looking for trends. So there's no point buying it for a gap up. Like, say, for example, I saw this trend persist, then I would think, oh, buy stocks that close near the highs that have spiked $1 and gapped up $1 because they'll gap up again the next day. But in this case, it doesn't. Is it up or down from the close? It's actually down a little bit. Did it spike the next day? No. If I see a continuous trend of stocks spiking that close near the highs, spiking the next day, then I'm going to always buy that pattern. It's like I have identified a new pattern. And what was its high of day the next day? Its high of day was the open. What was its open to high of day percentage? Same as before, nothing. Did it wash out? This is a really good trend that I've identified through these Excels. Did it wash out the next day? Yes, it did. That means like it gapped up the previous day, it closed near its highs, and then there was a lot of profit taken the next day because people realized it didn't spike again. We can see it didn't spike here. No spike. Did wash out. That means that it lost some of its momentum, generally profit taking. And then did it grind back? No. And then the following day, I'll check even 3 days. I'll go look again the next day. Did it spike? Yes. So a stock that initially gapped up, went $1 higher on a spike. The next day, I'll think I'll buy a washout because it closed near its highs. People are going to take profits, so it washes out. You gets bought back up, kind of thing. You buy the washout if it grinds back up. On this occasion, it didn't, but it's a promising trend that it does. And then if it dips all day, I'll buy it the third day because it spikes. If this is a continued trend, this is just one stock. You've got to look through them all to match trends. And you can do this for grains, and yeah, then you start making like trends like stocks that go up large pre-market, wash up, and generally grind back up to the highs. This was a finding I made on the 13th. Another one, charts that will grind up can grind up a little just if they make a small move of 10% or so. They can grind up big the next day when more people learn about the stock. Or this finding on the 20th, look for stocks up more than 10% pre-market to wash out and grind. These are all trends that I've kind of found through just tracking this different data on these spikers, grinders, and gappers. And that really wraps it up. If you're just learning the NASDAQ for the first time, it's so fucking paramount that you track stocks just so you can stay on top of it. And honestly, it will do you wonders to staying on top of the stock market because to be a winning trader, you need to identify trends before other people. And the only way you're going to identify trends before other people is by understanding the stock market more than other people. And when they've got a wealth of experience more than you, then it's a tough job. So you need to study a whole lot obsessively. And obsessive in psychology is a word that they don't like to use because it means that you've got a problem. But in terms of winning and being a strong performer, you have to be literally obsessive. And people say that there's a good quote. It's obsessive is what lazy people call people with dedication. And it's true. I like to say you've got to be a bit obsessive, and it gives you that edge. And I'm signing out now. It's just a quick video, so you guys can now make your own Excel. I didn't want to just give you my Excel because it's like me giving you my cheat test papers before an exam, and then you're going to look at the exam, my test papers, and you're going to try and do the exam with them, and you're not going to understand them because it's my notes. So you really need to make your own notes, and if you do that, I think you're onto something cool. Good luck, everyone. Thanks again for the support. I am on Snapchat, Junk1987. I've actually got a new website coming out, which is going to keep up detailing all of the blogs. I've got some written blogs. I'm actually a copywriter in real life, so I'll be copywriting a lot of blogs for my own web. And that's pretty much it. If anyone else needs any help, I'm happy to help. Further questions, I'll make another video. Good luck out there. Peace out, and just fucking rock the market.